talking about how the supply chain has really been affected and how most of the SMEs who are sitting with that supply chain have found it very difficult in terms of how they, one, access goods, access to financing, and access to markets. And as you said, in terms of what we're looking at through the banding world is you're finding a different way in terms of how your suppliers, your distributors are dealing with you. Because once the tide changed, we saw what happened during the Ukraine war. Suddenly, goods could not get it to our countries or different parts of the world at the time that they are actually used to get into. We found our situations where even how we used to do things as banks, where I could not be able to release stock that you've already imported because your documentation has not arrived. And you have a situation where the goods are already at the port, but the documents are not here. So how do we deal with such kind of challenges? We found ourselves thinking differently. So we had to find a way of looking at how we still have the risk imminent with us, but still mitigate it in such a way that you can be able to access these goods. We crafted different documents, arrangements, and we talked to shippers, we talked to government clearing agencies and customs, so that we can be able to have a smooth way of you accessing these goods without having those shipping documents. And we've seen this transit even now in terms of access of credit. Because, I mean, as interest rates rise, we've seen a lot of challenges around even your margins that we are seeing that SMEs are getting in their businesses. And for us to deal that, we had to come back and say, how do we ensure that you provide access to financing and still ensure that the customers and the retailers or distributors maintain a margin that is considerable to keep their businesses alive? And for us to do this, this is where the partnership around ecosystem came, where we partner with the corporates and say, let's sit back, let's look at a customer's trading history so that we can be able to provide limits that are concerning in terms of how they trade, not their financials, not look at their books in terms of how they put it in place, because the story from a financial will not tell the story in terms of a day-to-day basis on how that customer runs his business. So these are all innovative ideas that we had to basically as a bank sit and ensure that we come through with them to support our SMEs.
What we see, we almost see like we are back to COVID times. Do you remember COVID times? And how you needed to think about what's your plan B? And how you needed to think, how do I reposition, repivot my business to make sure that I continue to survive? And for me, I see, when you think about where we are as a country, you almost need to think that you need to adapt to this new normal. We said COVID was a new normal. Now you need to actually take it a notch higher and think about, as a business person, where are your new revenue streams going to come from? Right? And we have such great opportunities with the Africa Continental Free Trade Agreement. And I do not know to what extent businesses understand the opportunity that it portends, right? For them to actually think, how do I go across borders? You know, I just don't need to remain small anymore. COVID already taught us we can go online and we don't need to have a store, right? So how do you take that further to saying, I can actually do this in another country, right? There are already countries that are doing trade under the guided arrangement, and the ones that have met the minimum requirements, I understand there are about 21. Kenya is part of them, Mauritius, and therefore there's an opportunity for you to begin thinking, where do I go next? Is that my target market? How are they? And for me, that's what really drives me when I think about, yes, they're talking about this big term, and for an SME, you've got to ask yourself, am I ready for all these opportunities? They keep talking about Africa being the next big market, right? So how are you positioning yourself? And that's what then drives me, given that I take care of SMEs, to figure out what kind of conversations do we curate to add value to their business and make sure that it's sustainable.
How do we connect our businesses to wealth management? First of all, just to say congratulations for taking the first initiative to start a business. That is wealth building. So you're building wealth through your businesses, but we need to take it now to the next level. So after you've made money, how do we ensure that our businesses continue thriving, expand, as we are saying, because businesses expand through capital. So wealth management comes in to link your money, both the business and yourself, to greater opportunities and greater revenue lines that you do not necessarily make when you're dealing in your business. What I mean is, you've made money as a business, you have a balance sheet. Many times, SMEs commingle personal money and the business money, and that remains almost a blurred sort of place where you cannot differentiate the two. So when you come to wealth management, we help to delink and to manage those monies in a manner that to support the business to continue thriving, so your balance sheet becomes stronger. And you know that because when you come to our transactions, the bank will ask you about your balance sheet and your financials and things like that. So we help you to make sure that you have a solid balance sheet that is well invested, that is secure, that has the cash flows, because cash flow is king. Then we come to yourself, you do not need to forget you. So we want to help you in your wealth journey to reinvest part of the money that you have made, part of the profits that you have made, the earnings that you're making, so that you secure and you achieve your objectives and your goals for the future. And your objectives are many. It could be retirement, because we forget ourselves. We work all around and we forget that perhaps we are going to retire at one time. You have goals where you want to take maybe your children to higher education, and you're thinking the business will take care of that, but that needs to be outside the business and needs to be taken care of in the right way. So that's how we're entering. We also do a lot in risk management, just making sure that risk is managed properly. Capital is allocated efficiently, because you need capital to be allocated in the most efficient manner. And we are very good in research, and we're good in telling you this is the risk that maybe you can afford at this point, and this is the risk that you do not need to take. In a bunny world, risk management becomes very critical. And I know Julia will talk about risk management in terms of insurance products, but there's risk management in terms of selecting where do you allocate your shilling so that it is most safe.
Most times when you think about insurance, most people, they find themselves lost in what do I need to have today? And every day we wake up, we come to work, we run our businesses, we are employees, and we do so much. We are faced with risks. And whether we are traveling, whether we are seated on our desk, and I tell people, like, even when we are seated here, everybody here probably has some level of insurance. It could be your medical insurance, it could be education for your children, it could be your car. If you've driven here, you've got that. So every day you're waking up, you're faced with risks. You're coming to work, you don't know what's going to happen, you don't know what's the next move. Sometimes we face accidents. There was COVID the other day, and we saw people paying bills up to 4 million shillings, 8 to 10 million. And what do we come in to bring into this conversation? We are saying, even as we're operating in the bunny world, we are saying that we are here to help mitigate this risk that you face every day. We are here to offer solutions, because we can see how you start your business and you're wondering what are the areas that if anything happened, then my business goes bust. It could be fire, for your premises. It could be you're the key person running your business today, that if you get even admitted, that business is struggling to survive because you're not on stage. You are the parent of these children, so you need some level of insurance. So if maybe there's some disability, money can be injected to support the family. It could be that you're trying to make profit and there are natural calamities that are beyond your control. It could be drought, it could be, hailstorm. Those things affect people who are even in crop. And then you don't know, you put in so much money, and then you're losing it. So we are saying for a fraction of an amount of money you can put in, and if the risk happens, then we come back to compensate you. And I use an example of a phone. All of us have phones, maybe whether smartphone and whichever phone you have. If this phone falls down and it breaks, you'd have to go to your account and replace it. But if you had a pre-insurance, you'd not need to do that. You just come to us, you claim it, and we give you another phone. Then you can use that money to inject it back to your business and generate more.
For SMEs, I can't leave this place without saying, the money we see in your account is what really supports how much we can lend to you. So it's so important. I always say, even if it's 1,000 shillings, 200 bob, let it hit your account. Then make your transactions from there. Because that's what will actually tell us that I'm having this business. So, and I know a lot of times now, especially with ABSA in Kenya, you are able to trace some of these transactions. And we do look at ABSA statements to support our conversation.
It could be that you're doing businesses together, you're importing things together, that you could insure them together, then you enjoy economies of scale. And other than that, also for your own individual insurances, because I've seen people, WhatsApp groups are a lot today about fund drives for funeral covers. Your funeral people have died and you have to fund drive for them. And you've seen a lot of these things coming, even weddings, people are fund driving for that. And you could actually take some insurance out of that. Then as a group, you find, because you've paid this amount of money, and it's as low as even 2,000 shillings a year, 2,500 a year. And if something happens to a member in the group, then you're paid 200,000 to take care of that. Then you don't have to fundraise to actually pay for the funeral for that member. So there's so many things we can do together as groups and insure as a group, and you're able to get compensated when this happens. And it saves actually your capitals and the money that you have in the bank.